Welcome to your ultimate pit stop, Piston Pundit. Since August 2025, coffee has become an unlikely flashpoint in global trade. A sudden 50% U.S. tariff on Brazilian imports jolted supply chains, pushed prices higher, and forced roasters to rapidly adapt their blends. Brazil redirected exports toward Europe and Asia, while Canada stepped into the vacuum, reviving trade talks with Mercosur to secure alternative pathways. From cafes to commodity markets, the effects are rippling fast. In this video, we break down how tariffs, trade pivots, and shifting alliances are reshaping supply chains far beyond your morning cup. Tariff Shockwave: how a 50% coffee tax shook America's morning cup. On August 1, 2025, the U.S. slapped a 50% tariff on Brazilian imports, including coffee. Within weeks, shipments to the U.S. plunged 46% year over year, then another 20% by mid-September, according to Shockwave. Industry leaders warn that if tariffs persist, American roasters may permanently shift blends away from Brazil, disrupting long-standing sourcing patterns. Consumers feel it fast. Higher input costs ripple through cafes and grocery aisles. Analysts estimate Starbucks' North American costs could rise half a percentage point, pressuring earnings and pushing up prices across major chains. Why Brazil matters is simple: scale and consistency. Its beans anchor global pricing and blend stability. Taxing the price setter scrambles the entire pricing structure. Alternatives exist, but none match Brazil's mix of volume and logistics. There's faint policy hope. Coffee could be exempted in future trade deals, but exemptions hinge on national interests. Until then, buyers are bracing for a long tariff winter. But Brazil isn't sitting idle in this brewing storm. Its response was fast, calculated, and global. Brazil's counterattack: strategic diversions, specialty pain, and market rewiring. Brazil's response was classic strategic maneuvering. Rather than panic selling, exporters diversified their buyers and held inventory, betting that tight markets would lift prices again. Shipments detoured to Italy, the UK, and even Colombia. Yes, another coffee heavyweight, absorbing US slack. Brazil's specialty segment, however, felt sharper pain. Micro lots and boutique lots, already carrying higher premiums, were hit hardest by tariffs. An intriguing exception was Jacu Bird coffee, the ultra-luxury oddball beloved in Japan and Europe. Its insulated niche buyers barely flinched, underscoring how mainstream specialty depends on the U.S. to keep costs stable. Looking beyond beans, Brazil is following a familiar commodity pivot playbook: broaden the customer base when one major market goes cold. It's the same strategy seen in beef and other ag sectors when tariffs flare. And for anyone wondering, no, re-exporting through third countries isn't a viable loophole. The U.S. tracks those flows closely, and penalties outweigh any gains. Brazil can redirect volume for now, but make no mistake, its exporters prefer a negotiated truce over a long detour. Before we delve deeper, hit that like and subscribe button. It helps more auto and trade enthusiasts find these breakdowns. While Brazil is diversifying its playbook, another player in the Americas is shifting gears: Canada. Canada's bold overtake, from backup buyer to global trade bridge. Amid the US-Brazil standoff, Canada moved strategically. In late August, Ottawa and Brasilia agreed to revive Canada-Mercosur trade talks, dormant since 2021. The goal: more routes, more partners, and fewer single-point failures when U.S. tariff policy shakes supply chains. For Brazil, this pathway diversifies demand while maintaining G7 market access. Formal negotiations are expected by early fall, with a relatively clear runway. Canadian consumers, however, aren't enjoying cheaper coffee. Global tightness, weather hits in Brazil and Vietnam, low stocks, and steady demand keeps prices high. Even Tim Hortons raised prices 1.5%, roughly 3 cents a cup. Where Canada gains ground is system stability: longer port hours, prioritized ag clearances, and expanded warehousing. If paired with infrastructure financing for origin partners, Canada could evolve from backup buyer to bridge builder, linking South American supply to North American demand under fewer political shocks. It's less about cheap coffee and more about reliability as currency in volatile global markets. But while Canada strengthens its position, U.S. roasters are under mounting pressure to adapt. Roasters under fire: how U.S. coffee makers rewrite their playbook amid tariff turmoil. Inside the U.S., roasters are executing 3 survival moves. First, they're buying cautiously, shorter contracts and smaller volumes, until policy clarity emerges. Second, they're reformulating blends, leaning on lower-grade Ethiopian naturals, adding more Robusta, and testing Central American substitutes to maintain body and price points. Third, they're selectively raising prices where brands can absorb the hit, while private labels quietly downspec to keep shelves competitive. Policy relief is uncertain. 2 signals matter: an executive order framework that could exempt non-US grown goods like coffee, and a bipartisan bill to remove post-January 19 tariffs. But both include reciprocity and national interest clauses, negotiation tools, not guarantees. Rerouting through third countries? Secafé is clear. U.S. regulators detect it easily, and legal risks outweigh rewards. Finished coffee isn't a substitute for bulk green beans. The result? Fragmented supply, volatile pricing, and exporters sitting on unusually high inventories, waiting for either policy relief or price recovery. And this isn't just a coffee story. It mirrors bigger, familiar patterns for the auto world. From beans to batteries, a global supply chain wake-up call. For auto enthusiasts, this story sounds familiar. Microchip shortages stalled assembly lines, shipping bottlenecks inflated dealer costs, and policy shocks reshaped sourcing for batteries, steel, and aluminum. Coffee is now following that same playbook. Tariffs lift procurement risk, buyers diversify origins, logistics reroute, and consumers face new price tiers. For retailers, this means multi-origin contracts, supplier scorecards factoring political risk, and contingency blends to minimize sensory shock. Logistics winners are those that keep goods moving while others politicize ports. Brands now compete on transparency, explaining blend changes and shielding customers from volatility. For policymakers, there's a warning. Tariffs push partners to build alternatives. Canada's Mercosur revival shows how quickly supply can bypass single markets. Autos are seeing the same shifts with battery minerals and critical components. Diversify or pay the volatility tax. Whether tariffs ease or not, resilience is now the key metric, from your daily brew to your next car. All of these shifts lead us to the big picture, how tariffs reshaped the global map in just months. The final pour. How a coffee tariff shock redrew global trade maps. The 50% tariff on Brazilian coffee didn't just nudge cafe prices, it redrew the supply chain map, pushed Canada into a starring role, and forced U.S. roasters to rethink their entire playbook. Brazilian exports to the U.S. plunged, while Europe and Asia picked up the slack. Policy exemptions may come, but nothing is set in stone. Until then, uncertainty gets priced into every shipment, every blend, and every cup. For our automotive community, this isn't just about coffee. It's a live demonstration of how quickly policy shocks can reshape industries. The same mechanics that apply to nickel, semiconductors, or tires. If coffee pivots this fast, imagine what happens when critical auto components are at stake. Now let's hear from you in the comments. How do you see these tariffs reshaping global trade in the long run? Do you think Canada's pivot with Mercosur could serve as a model for other commodities, or even auto parts? And if similar tariffs hit key auto inputs like nickel or chips, how do you think automakers would adapt this time? Before we wrap up, don't forget to subscribe to Piston Pundit and hit that notification bell so you never miss the next vehicle update or trade deep dive. Your insights fuel this pit stop, so jump into the conversation below. Thanks for watching and see you in the next one. You can now check out any of the videos on the screen. There's plenty more to explore.